the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3, and it's now time for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, here's a quick recap of how markets fared today. Well, Singapore shares hovered around the flat line today as investors sort of continue to monitor the global trade environment. So if you look at the Straits Times Index, it dipped 0.08% to 3,913 points at about 2:15 p.m. Singapore time, with a value turnover of 867 million Sing dollars in the broader market. Now let's take you through the closing numbers. The STI ended 0.07% in the red at 3,914 points. In terms of value turnover, we are looking at 1.51 billion Sing dollars. Now gainers trailed losers 247 versus 287. Now in terms of top advances for today, we've got for you UOL, Horpa and UOI, and top decliners we've got GMHUSD, iFast and ASUS. Now in terms of companies to watch, we have NetLink, NBN Trust and ComfortDelGro, because NetLink will replace ComfortDelGro on the reserve list of the STI following the index's March 2025 quarterly review. Now, elsewhere, from the possible impact of Trump's tariffs on Southeast Asia to how Nissan board is reportedly set to meet next week to discuss the future of its CEO, we've got more international and corporate headlines in focus. But first things first, let's start with the counters to watch on the SGX. NetLink Trust and ComfortDelGro. Now, as we told you earlier, NetLink will replace ComfortDelGro on the reserve list of the Straits Times Index. Now, the list is actually made up of the 5 highest ranking non-constituents of the STI by market capitalization. So, stocks on the reserve list will replace any STI constituents that become ineligible as a result of corporate action before the next review, which will take place in June 2025. So who are the other 4 entities on the reserve list? Well, we have Capital Land Ascot Trust, Keppel DC REIT, Keppel REIT and Suntec REIT. And the changes take effect at the start of business on the 24th of March. So units of NetLink NBN Trust up 0.585% and units of ComfortDelGro up 0.69%. Now, aside from that, we're also tracking the local boss SGX because it announced several changes to its foreign exchange and technology management teams yesterday, and this included 2 resignations. So it said that Lee Beng Hong, the head of wholesale markets and platforms, had resigned to pursue other opportunities. Now, he has been in the role since 2019 and he'll leave at the end of March. He will be replaced by John Philip Malay, who is the co-founder and CEO of BidFX, which is an FX over-the-counter platform business acquired by SGX Group in 2020. Now, the group CTO of the company is also stepping down, and his responsibilities will be covered by Chief Information Officer until his replacement is found. So if you look at shares of SGX, up 0.378% today. Okay, now from Singapore, let's set our sights further on the broader region. So Asian stocks tumbled at the open today as in a sea of red at the end of the day as well, following a tough day on Wall Street. Uncertainty over U.S. President Donald Trump's trade policies that continue to weigh on investors' minds. Even if we look at Bitcoin, that's down 5.7%. Why? Because even though Trump signed an executive order to establish a strategic Bitcoin reserve, that's done without planning any public purchases of the cryptocurrency. Now, if we look at major indices in Asia, they were in the red despite Trump's move this morning to delay some tariffs targeting Canada and Mexico. Now, the halt will last until the 2nd of April, but that offers temporary relief to automakers. So Trump has said, though, that he will not modify broad tariffs for steel and aluminium imports, which are due to take effect next week. So that's what's going on. But back to Asia, Japan's Nikkei dropped more than 1.5% at the open. Shares in South Korea and Australia also fell more than 1%. Now, Chinese markets, which have been riding a wave of stimulus-induced optimism, were mostly flat as well. And that's, of course, after Chinese stocks jumped after Beijing announced the growth target of around 5% at its annual meeting of the National People's Congress on Wednesday. Now, for today, traders will look ahead to February's U.S. jobs report, which is a key indicator of economic health. And weekly jobless claims so far out yesterday were better than expected, but Wednesday's private payrolls report from ADP that lagged estimates. So all eyes will be on what's to come. But let's take you through how Asian markets ended the day. As we told you earlier, markets in a sea of red. Australia's ASX 200 closed down 1.81%. Nikkei 225 in Japan closed down 2.26%. South Korea's Kospi closed down 0.49%. Hong Kong's Hang Seng closed down 0.75%. And the Shanghai Composite closed down 0.23%, a sea of red. Okay, now from Asian markets, let's take you through some corporate headlines. Well, in corporate news, Nissan Motor will hold a board meeting next Tuesday, that's the 11th of March, to discuss the future of CEO Makoto Uchida. Now, that is according to people familiar with the matter, and they said Uchida's potential replacement is expected to be a key item on the meeting's agenda. Now, Nissan spokesperson declined to comment on the matter, but per a Bloomberg article that's out in February, the embattled Japanese automaker has been drawing up plans to replace Uchida. Why? After another poor fiscal quarter and also that fallout of its potential tie-up with Honda Motor. So, Yomi Uri actually reported today that the automaker is considering 3 foreign candidates for the role. So, who are they? Well, the report said that trio are CFO Jeremy Papin, Chief Performance Officer Guillaume Cartier, and Chief Planning Officer Ivan Espinosa. What do you think? Well, we've taken you through market movements in Singapore and Asia and also what's going on with Nissan. And finally, what's market view without really talking about U.S. President Donald Trump's tariff policy? Well, in the latest twist, U.S. President Donald Trump suspended the 25% tariffs he imposed this week on most goods from Canada and Mexico, and that's done this morning. The exemptions covering the 2 largest U.S. trading partners expire on the 2nd of April, and that's also when Mr. Trump has threatened to impose a global regime of reciprocal tariffs on all U.S. trading partners. But what should we watch out for in the region? Well, the Business Times paints a picture of Southeast Asia's future against a backdrop of U.S. President Donald Trump's tariff onslaught. Now, ASEAN may be out of the firing line for now, but it will not be long before Trump turns his attention on the region. So BT put up this article titled, How Trump Tariffs Affect Southeast Asia, to help you cut through the noise in 7 charts. Now, I wish I could show you the charts over the airwaves, but unfortunately I couldn't. So here are some broad topics, broad strokes, broad notes from the article, and I hope to pique your interest to read more. So first things first, let's take you through Trump's tariff timetable. Now, on the 4th of February, Trump imposed 10% tariffs on imports from China, and on the 4th of March, 1 month later, he imposed 25% tariffs on imports from Canada and Mexico, which is suspended until the 2nd of April. That's an additional 10% tariffs on imports from China as well. Now, on the 12th of March coming up, 25% tariffs on global steel and aluminium imports. And on the 2nd of April, that's when Trump will announce reciprocal tariffs worldwide after investigations by his administration on the levies conclude. Now, in terms of impact on GDP in the region and countries in the region, the estimated GDP impact of a 10% drop in U.S. exports under blanket tariffs ranges between negative 0.73% for Vietnam and negative 0.12% for the Philippines. Now, let's talk about the balance of trade then. Because if we're looking at a widening trade deficit, that is Trump's bugbear. And as the U.S. gets tough on its 2 largest trading partners, Canada and Mexico, Southeast Asia is in the clear for now. But if we look at ASEAN, all ASEAN members except for Singapore have a merchandise trade surplus with the U.S. So countries with substantial surpluses or those serving as tariff circumvention hubs for Chinese firms, they're likely to face heightened scrutiny. Now, Vietnam remains the key country to watch. So, how do we plug that gap, the deficit? Well, analysts at Morgan Stanley said fixing the trade deficit as a means of staying out of Trump's eye line will be difficult for Southeast Asian economies, whose trade surpluses with the U.S. actually form a significant percentage of their respective GDPs. Now, they noted that since Asia runs a commodity trade deficit with a larger oil and gas deficit than that of coal and agricultural products, there may be greater scope for the region to increase oil and gas imports from the U.S. Now, the analysts also added that for high-tech equipment categories, think your defense equipment, civilian aircrafts, parts and semiconductor manufacturing equipment, there may be scope for economies to increase purchases. Now, reciprocal tariffs, that's another thing to watch as Trump pledges to stamp up what he deems unfair trade practices. So if you look at a February 13 fact sheet posted on the White House website, it cited an unnamed 2019 report as stating that across 132 countries and more than 600,000 product lines, U.S. exporters face higher tariffs more than two-thirds of the time. So in ASEAN, Thailand has the highest tariff gap with the U.S., noted by a report by BOFA Securities. So the main products subject to higher import tariffs relative to the U.S. include your meat, vegetables, food products, and transportation vehicles. Now, finally, not to mention, we are also looking at the gathering storm of North America tariffs because the first wave of 25% tariffs on Canada and Mexico took effect on the 4th of March earlier this week, but was delayed this morning for a month under U.S.-Mexico-Canada agreement rules. So Trump's tariffs on the U.S. two largest trading partners, they're unlikely to have a dramatic impact on Southeast Asia directly, but pundits say this is just his opening act. So watch out for secondary shockwaves through the U.S. and how that could dampen growth from disrupted trade flows. So a lot of things going on. What do you think about Trump's latest trade policies? Let us know anytime. The magic number is 88550893. Once again, 88550893. We'd love to hear your thoughts. And that's all I have for you on Market View. I'm Chua Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.